Study Section 7, Incomplete Records and Single Entry. Introduction. Up to this point, we have assumed that an organization keeps its records based on the application of double entry principle. However, in practice, many small business units do keep incomplete records in which some transactions are recorded only once. The preparation of final accounts in such situation requires the use of techniques that will be discussed in this study section. These techniques are also applicable when some accounting records are accidentally lost or destroyed. Objective. At the end of this study section, you should be able to obtain the missing figures in a question involving incomplete record. For example, pretest. 1. Briefly describe how you can estimate the following items in an incomplete records. A. Opening capital. B. Gross profit. C. Credit purchase. D. Stock loss. 2. What is the relationship between markup and margin? Content. A. When opening capital is missing, you can obtain opening capital from opening statement of affairs. Statement of affairs is a statement prepared from incomplete records showing the financial position of an organization. Its equivalent from double entry is balance sheet. In preparing the opening statement of affairs, you need to recall the basic accounting equation. Asset is equal to capital plus liability. This implies that capital is equal to asset minus liability. Example 1. The bookkeeper of Jesse Computer Center had the following details as at 31st December 2006. 31/12/2006. Equipment, 20,000. Furniture and fittings, 3,005. Stock, 29,460. Debtors, 37,940. Cash and bank, 54,110. Rent prepayment, 1,190. Creditors, 40,000. Outstanding insurance, 1,200. Drawings, nil. You are required to ascertain the opening capital for the 2007 accounting year. Solution. Jesse Computer Center. Statement of affairs as at 31st December 2006. Assets. Fixed assets. Equipment, 20,000. Furniture and fittings, 3,500. Making 23,500. Current assets. Stock, 29,460. Debtors, 37,940. Cash at bank, 54,110. Rent prepayment, 1,190. Making 122,700. Total assets, 146,200. Liabilities. Current liabilities. Creditors, 40,000. Outstanding insurance, 12,000. Making 41,200. Long-term liabilities, nil. Making 41,200. Opening capital for 2007, 105,000. Note: 1. In the above solution to example 1, we make use of the accounting equation. Capital is equal to asset minus liabilities. Capital as at 31st December 2006 represents the opening capital on 1st January 2007. B. When profit is missing, you can ascertain the level of profit by using the following accounting equation. Net profit is equal to closing capital minus opening capital. You may need to obtain the opening capital from the preparation of opening statement of affairs. For some questions, you may also need to obtain closing capital from closing statements of affairs. If there is drawing during the period, the accounting equation becomes net profit is equal to closing capital plus drawings minus opening capital. And if additional capital was introduced during the period, the equation becomes net profit is equal to closing capital plus drawings minus additional capital minus opening capital. C. When credit sales and stroke or credit purchase figure are stroke is required. You can obtain these figures by preparing the appropriate control accounts. You will remember that you need total debtors control account for sales figure while you need total creditors account for purchases. Example 2. The following information relates to Odigwe Enterprises. Debtors balance 1/4/2004, 17,500. Cash received from debtors, 28,900. Debtors balance, 31/3/2005, 31,400. You are required to ascertain the credit sales for the period. Solution. Debtors control account. Balance B/D, 17,500. Credit sales balancing figure, 298,800. Total, 316,300. The right, cash received, 284,900. Balance C/D, 31,400. Total, 316,300. You can also obtain the credit sales by using an alternative presentation as follows. Closing debtors in Naira, 31,400. Cash received, 284,900. Total, 316,300. Opening debtors, 17,500. Credit sales, 316,300. Note: for questions that involve both cash sales and credit sales, you will obtain the total sales figure by using the equation below. Total sales is equal to credit sales plus cash sales. Add for a total purchase. You can use total purchase is equal to credit purchase plus cash purchases. D. Markup and margin. You can use the techniques of markup stroke or margin to ascertain purchases or sales of stock by relating cost of goods sold to profit. The relevant equations are as follows. 1. Cost of goods sold is equal to opening stock plus purchases minus closing stock. This implies that purchases is equal to cost of goods sold plus closing stock minus opening stock. 2. Markup is equal to profit over cost of sales times 100%. 3. Margin is equal to profit over sales times 100%. 4. Sales is equal to profit plus cost of goods sold. This implies that profit is equal to sales minus cost of sales. Example 3. The following information were obtained from the records of Tomiwa & Co. Stock as at 1/7/2006, 8,400. Sales for the year to 30/6/2007, 80,000. Stock as at 1/7/2006, 9,350. You are required to ascertain the purchases during the year if the business uses a markup of 33 own number 1/3%. Solution: estimation of cost of goods. Sales 133 own number 1/3%, 80,000. Gross profit 33 own number 1/3 divided by 133 whole number 1/3 times 80% in brackets, 20,000. Cost of goods sold 100%, 60,000. Calculation of purchases. Cost of goods sold 60,000. Closing stock 9,350. Opening stock 8,400. Purchases 60,950. Note: 1. If margin is X%, if markup is equal to Y%, margin is equal to Y over 100 plus Y times 100%. E. Using accrued and prepaid expenses figure, you can ascertain the expenses incurred in a particular period by preparing T, accounts of the respective expenses. Example 4. The following information was obtained from the records of V. Okocha Enterprises for the year ended 30th June 2007. Accrued telephone expenses 1/7/2007, 34,000. Payment for telephone bills during the year 26,880. Accrued telephone expenses 30/6/2007, 4,560. You are required to ascertain the telephone expenses to be charged to profit and loss account for the period. Solution: telephone expenses. DR: cash paid 26,880. CR: balance B/F opening accrual 3,400. DR: balance C/D closing accrual 4,560. CR: profit and loss account balancing figure 28,040. DR: total 31,440. Total CR 31,440. Balance brought forward 4,560. You can also use alternative presentation as follows: closing accruals 4,560. Cash paid 26,880, making 31,440. Opening accruals 3,400. Telephone expenses due for the period 28,040. E. Stock lost / stolen. Subject to verification of facts, an insurance company will, in consideration of a premium, agree to indemnify a trader in respect of loss of stock by one or other causes. Where it is not possible to verify the actual stock loss, a frequent plan is to construct a trading account. Assuming a given rate of gross profit earned on sales and then compute the closing stock from it, that is, the stock on the assumption given that will be in existence but for the cause of the loss of stock. For you to estimate the stock loss, you will need the following information. 1. Basis of previous stock takings. 2. The stock value as at the date of the last balance sheet or nearer date. 3. The total purchases of goods to the date of the fire, excluding the goods invoiced but not delivered to the premises where the fire occurred. 4. The total sales of goods for the period indicated in 2. 5. The value of stock salvaged. 6. The average rate of gross profit made in recent years with proper adjustment if required. Example 5. A fire occurred on the premises of a merchant on 25th July 2008. The value of the stock salvaged was 170,000. The books disclosed that on 1st March 2008, the stock was valued at 4,020,000. The net purchases to the date of the fire was 25,180,000, and the net sales during the same period was 32 million. The average gross profit for these last 3 years, the agreed basic were 15% on sales. You are required to prepare the insurance claim for the merchant. Solution. Trading account for the period 1st March to 25th July 2008. In Naira. March 1, stock 4,020. July 25th, net purchase 25,180. Gross profit 4,800. Total 34,000. The right side, 2008. July 25, net sales 32,000. July 25, stock 2,000. Total 34,000. Fire insurance claim in Naira. Loss of stock per trading account 2,000. Stock salvaged 170. Balance due from insurance company 1,830. Summary. In practice, many small business units do keep incomplete records in which some transactions are recorded only once. The preparation of final accounts in such situation requires the use of different techniques for estimating missing figures. These techniques are also applicable when some accounting records are accidentally lost or destroyed, and also in estimating stock loss and insurance claim. You can obtain opening capital from opening statement of affairs. You can ascertain the level of profit from the difference between opening and closing capital. You can use your idea of control account to estimate credit sales and credit purchases. The relationship between markup and margin may be required in estimating purchases, sales of stock. You can ascertain the expenses incurred in a particular period by making necessary adjustments for accrued and prepaid expenses figure. This is the end of study section 7. Thanks for listening.